You are listening to chartingwealth.com for Tuesday, the 3rd of October, 2017. We are already into the new month and we see interesting things happening in the market. Of course, we're now in the fall-winter trading zone now that September has drawn to a close. What does that mean? Well, it's the favorite time of year to trade. Why is that? Because we're out of the summer doldrums. The big money starts coming back into the market, which means more volume, which means the summer doldrums where things can pull back and they can be up and down and sideways and all with just smaller amounts of money moving things makes it more herky-jerky and more difficult typically to track. But what do we have going on now? Well, we're getting into the fall winter trading zone, and it's going to be like it was this last year. We're hoping much easier to get out there and track things, ETFs, and make lots of money in our virtual trading account. So let's see what's going on. Oh, by the way, for all of you, we have already recorded, we've already put it up, and we will have it attached to the email that goes out to all of the subscribers. And again, if you want to subscribe for free, just go to chartingwealth.com and sign up. Why should you do that? Well, you're going to get the third quarter training that we have put out. At the end of September, we actually see that third quarter candlestick draw to a close, and that quarterly chart is amazing. It is just phenomenal how accurate it has been on the S&P over the years. If you followed that chart, getting in and getting out, again, just give you a little peek at it, and we're very proud of the new training that's come out. But the quarterly chart, amazing. It would have gotten you into the market at the right time, out of the market at the right time over the last 20 years. It's just phenomenal to go and take a look at. I mean, just amazing. Would have kept you out of the crashes that we saw starting right there in 2000 through about 2004 into 2005, would have gotten you into the run-up to 2008, gotten you out through the 2008 crash, and gotten you back in mid to late 2010 for the latest run-up. We talk about the Trump effect, the weirdness that occurred in 2016, and then we cover where the latest candles are. You want that training? You got it, but you have to sign up for and be a subscriber to chartingwealth.com. And again, you do that by just going to chartingwealth.com and signing up, putting in your email address and your first name, and we'll get it to you. Now let's jump into these charts. What do we see going on for the day? Well, we see the S&P 500 is up 0.43%. NASDAQ 100 up 0.09%. We see TLT bonds down 0.38%, gold down the most, 0.67%. So let's go and see what's going on with the S&P 500. We had some concerns, as we told you, on our comprehensive review and forecast over the weekend. Very weak crossover. However, the week started off with a bang. Derivative oscillator heated up quite nicely, and we saw the price percent oscillator really continue to move over going up. It was a very weak crossing, very hard to see. If, of course, you jumped in this morning, good on you. So far, still don't feel real good about it. There'll probably be another jumping in point, well, toward the end of the week. In fact, let's just keep looking at what we see going on. You see on the 2-day chart that it was already a confirmed up move. The 2-day chart crossed over going up all the way back on the 12th of September. And then if we look at the 4-hour chart, what do we see going on there? Well, of course, it had crossed over going up back on Friday the 29th, which led to the end of the day. And what do we see going on? Well, of course, we see growth in the morning and in the afternoon, well above the Bollinger Bands, lots of strong growth. Now, where were we at 10:30 for the jumping in point? Well, the market did pop up, and around 10:30, it hit its high of the day. And then what it really did from then on is slide sideways. Now, what can you do at this point to jump into the S&P 500 on a potential strong up move? What you might want to do is literally follow this 4-hour chart, because it's already crossed over going down, 30-minute chart. It already crossed over going down and then sort of peaked back up. We don't trade on this 30-minute chart, so you don't follow that. You follow the 4-hour chart. Almost misspoke there. It's interesting to see what it did. 4-hour chart's continuing to spike. You can wait for a pullback on that for a jumping in point if you didn't get in at the 1030 mark. And, again, if you did, it hasn't increased anywhere. It's really just slid sideways since it hit that high around 1030. You can also look for a pullback on the 2-hour chart, which looks more like it's flattening out. Now that it's the fall-winter training zone, could it continue to speed up? Yes, but we've just got to make sure that we don't buy at a top and get screwed. You can't get in with unrealistic exuberance, jump in at just any point. And I have a lot of trepidation about where this market is going. It is blasting forward. We do have the weekly vertical crossover. It does appear that it has managed to do that, but we may have a better jumping in point later in the week or next Monday. So don't fret on that. We did not feel good, and we talked about it over the weekend about how weak the crossover was at the end of the week. Very weak on the derivative oscillator. And of course, the new week looks nice, but it's just the first day of the new week. And of course, we did have a confirmed strong weekly vertical crossover going down in TLT that we'll get to in just a minute. Remember, first rule in trading, don't lose money. Second rule in trading, make money. So we want to be careful with the hard-earned, and again, in this case, virtual cash that you're trading, but it's for your training. Now let's keep pushing through. What do we see going on the Qs? What's happening with QQQ? Up just a little bit, 0.09%. On the weekly chart, again, we don't have any kind of crossover going up. In fact, we're still on a crossover going down since that weekly vertical crossover occurred. Again, another weak one that occurred all the way back on the 16th of June. And of course, the market did go down for a few weeks and then popped up for a few weeks, down for a few more weeks through August, and then popped up at the end of August into September, and now has really been sliding sideways. So far, up a little bit for the week. Derivative oscillator still negative. Price percent oscillator is negative. Now, if we look at the 2-day chart, what do we see? We see that, of course, it crossed over going down back on the 22nd of September, and again, slidden sideways and tending up, particularly at the end of the day. Derivative oscillator is still negative, but the price percent oscillator appears to be moving up. What's happening on the 4-hour chart? Of course, it's in pullback mode right now. If indeed the up movement peels off and starts to roll back over going down, when you see that crossover happen going down, as happened back, just giving you an example of the last one that occurred on the 14th of September, that wasn't a trade for a down move at that point. I'm just saying when that happens, when a crossover going down happens, if the 2-day is still, as it currently is, in the negative, that is, the derivative oscillator has crossed over and is below the red signal line, derivative oscillator is negative also, and the weekly is still in a down move, then of course you would have a potential down move, and that 4-hour chart would be your trigger. So let's watch for that during the course of the week, and we'll see if we have a potential play in the Qs going down. We may or may not. We're going to let the charts lead us. What do we see going on TLT on the weekly chart? Of course, going into the 4th week of down movement. At the end of this past week, we had a crossover going down. In fact, it triggered the weekly vertical crossover. Those of you who subscribe to the charting service, we notified you of that. And of course, we charted that. So we do have a confirmed weekly vertical crossover going down in TLT, the 20-year bond fund. Started going up all the way back in February, if you can believe it. This is the first time since then that we have had a rollover going down. So, and of course, we made some nice money in some of these up moves, nice virtual money in these up moves over the last several months. Will we be able to do it in the coming months with inverse plays? We shall see. Derivative oscillators heated up quite mightily in the first day. And of course, the price percent oscillator is heading down. We look at the 2-day chart, of course, it crossed over going down all the way back on the 14th of September. Have had pretty strong down movement. When we look at that 4-hour chart, we of course see that it has been sliding sideways. Have things bottomed out there at 124? We'll see throughout the course of the day down. Now, did we have a good jumping in point on the 30-minute chart? And again, the only time we look at the 30-minute chart is to try to give us some idea if it's a good time to get into the market. And of course, what we had happen is the market opened, and then at the 10:30 mark, we still had sort of things in the positive. You could have, of course, jumped in at the opening of the 11 o'clock candle. That would have gotten you in somewhere around 124. The opening around 10:30 was again 124.81. At 11, 124.77. Of course, it reached a low throughout the course of the day toward the end of the day at 124.24. So again, jumping in point would have been fine if you looked at it and it was still positive and the derivative oscillator was still positive and the price percent oscillator was above. You could have held off and waited until the afternoon, although I know some of you just pull the trigger at 10:30, period. And again, that weekly vertical crossover works so often that I understand why you do that. You just go ahead and put in a purchase order and buy, and then practice trade and see how it works out. And as you know, time and time again, it works out pretty darn well, particularly when you have a strong surging market. Remember, the derivative oscillator, well, particularly the price percent oscillator, the MACD, is what the price percent oscillator is very much calculated on. We have all teaching on the difference between it and the reason we use the price percent oscillator versus the MACD. But it does require a trending market. If things are sliding sideways, very difficult to count on the price percent oscillator to be very accurate. So, looks like we're looking good after that weekly vertical crossover going down this last Friday for that jumping in point. Now, lastly, we will go over gold, and of course, we'll continue to track these things and keep you posted. We'll continue to keep an eye on the S&P 500 and the NASDAQ 100, and let's lastly jump into gold on the weekly chart. So gold's going into its 4th week of strong down movement. We did not have a weekly vertical crossover at the end of the last week. Looks like we'll probably have one throughout the course of this current week. We shall see. I mean, nothing's set in gold yet. Remember, the 5-day weekly candle doesn't end until Friday, and things are always subject to change. We do see strong down movement. Again, gold down the most of any of our charts today, 0.67%. On the 2-day chart, we have a strong trend. I mean, we're connecting what? 5 candles going down? That's pretty strong. And we continue to see strong down movement, derivative oscillator heating up, and the PPO, the price percent oscillator, really just sort of rolling over in a steep dive. Let's look at that 4-hour chart. Remember how we told you that it looked like it might be setting up to try to hold the floor at 122. And of course, if it blasted through that, those bets were off. And of course, it did. It popped back up around the 26th of September on Tuesday, last Tuesday. And then, of course, looked like it might be crossing over. And then that faded. And things have dropped off precipitously in gold as it's continued to trundle down. Those of you who jumped into gold back on the 11th of September, you got in somewhere, around the 127 mark or so? Maybe a little bit higher, maybe a little bit lower. If you even bought at the low, it was at 126. Then, of course, gold did sort of make a resurgence and got us a little worried around the 123, 124 mark, somewhere right in there. And then, of course, rolled back over going down and looking quite nice on those inverse gold plays right now. Remember, always follow that 4-hour chart. And when it's moving in the same direction as your 2 bigger charts, you can feel even better about what it's up to. Folks, that's where we are as we end the day on Monday. the new first day of the new month of trading, and we go into Tuesday, the 3rd of October. Thank you so much for being with us. You have questions, problems, concerns. We're happy to hear from you. Try to help in every way we can. God bless. All the best from the entire team here at chartingwealth.com.